And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. Today is Sunday, the 8th of October 2023. I'll be doing the weekly market review starting with the DXY weekly chart. As you can see, last week we had a long premium wick. As a result, we created the consequent encroachment of that. The weekly consequent encroachment of that premium wick is going to be influential for me, as well as we have created this fair value gap. So next week I'm expecting price to retrace towards this and perhaps this fair value gap. Remember that we had all of these up close candles with no retracements of any strong kind. So it's normal and expected to see some price to print some retracement lower before it resume going higher, reaching to the weak consequent encroachment. Keep in mind that we fell very short from reaching to the weak consequent encroachment. We actually reached, this is the low of the fair value gap or the high of this candle, we reached to it here, but we were very close from reaching to the weak consequent encroachment. Going to the daily chart, as you can see here, we have a sell side liquidity here. I'm expecting price to draw inside the weekly fair value gap that's shown on the weekly chart and to tap into the sell side liquidity to trigger the sell side liquidity, and we can see some more hawks towards this fair value gap. I also want to see the consequent encroachment of this premium wick to act as resistance if we trade above it. So we might reach to the consequent encroachment of this premium wick, and then we trade lower to take the sell side liquidity. Otherwise, we might just run it without retracing higher. That's pretty much it for the DXY. Going to the ES, as you can see, the same thing here. Actually, if you would go to your charts, you can see that we fell about 1.5 handles away from the weak consequent encroachment. So it didn't touch it here. We fell like 1.5 handles away from it, and then we retraced up higher. Keep in mind that last week we had an FP, so this is why you see this indecisive price action. Anyway, I'm expecting price to the weekly consequent encroachment to show us some support that can send price higher towards this weekly fair value gap to fulfill and to make this imbalance balanced out. So to balance this fair value gap, I'm expecting price to trade up higher, balance it out, trade to the bid to very shorter block, and then resume going lower. Take these sell side liquidity here and this sell side liquidity. Going to the daily chart, the same thing here. I'm also expecting a run towards this buy side liquidity here that can resume going to the weekly fair value gap to make it efficient. And especially this fair value gap right there. Many people have caught the move here, shorting this from here all the way down, and now they're trading their stop loss. Each time we create a high, low, and high, and we break below the low, their stop loss is going above this high. So many buy stops are going to be residing above this buy side liquidity, or at this level specifically, the 4,371 and 1/4. So many people who were short since the beginning here in September or August are going to be trading their stop loss above these highs and in this imbalance. So taking those buy side liquidity, offsetting them, and smart money are going to be accumulating shorts above these buy side liquidity and inside this fair value gap. That's going to facilitate and permit price to resume going lower, reach to these equal lows here, relative equal lows, and to this ultimate low. That's also I've mentioned it on the weekly chart. This this low, and we have the relative equal lows here. So that's pretty much it for the ES. Going to the NQ. Now NQ has been creating relative equal lows here with inside the weekly fair value gap. Price has retraced to work inside the fair value gap. Now it's the same thing said as the ES, but now NQ is doing it ahead of ES. As you can see, NQ has has been walking inside the fair value gap on the weekly chart, and it fell short from reaching to the fair value gap consequent approachment. So I'm expecting price to make this efficient and then break lower. And once we break lower, I want to see price break below the weak consequent approachment and treat it as resistance. And if it did so without taking these relative equal lows and without reaching to this deeper inside this fair value gap, basically if it broke below the weak consequent approachment without taking these lows, relative equal lows, and treat the weak consequent approachment as resistance, I'll be interested in seeing price, and I'll be interested in getting into the market and taking shorts, reaching to these relative equal lows. And inside this fair value gap, we have about three levels, primarily three levels, and secondary two levels, which are the quadrants, the 25% level and the 75% level. So mainly the relative equal lows, the consequent approachment of the weekly fair value gap, and the low of the fair value gap. So now I'm expecting price to work more inside of this weekly fair value gap, especially the consequent approachment of that fair value gap and the high of the fair value gap. It can keep some of it untapped because we have a high here. Price can open and take that high, reach to some of this area here of the fair value gap, and then resume going lower. Going to the daily chart, as you can see, we took the buy side liquidity here, which people are going to be trading their stop loss above this high. We accumulated their buy stops here. So now we're short, smart money are short here. They're going to be try to accumulate more positions here at the fair value gap. Price can wick through it to the fair value gap. It can walk inside this bearish order block, and then we can resume going lower, taking these relative equal lows and the weekly fair value gap. As I've mentioned, the levels of the weekly fair value gap. So that's pretty much it for the NQ. Going to Dow, here reviewing the weekly chart. As you can see, we took this inside the width that I've been calling out for weeks now in advance, maybe even months in advance. When we were here trading, I was calling this level. These levels, I was calling them. You can go back to your weekly reviews back in July, August. I've been calling these levels here on Dow, and we've seen price last week tapping into the sell side liquidity and creating this long discount wick. Now I'm expecting price to walk inside this weekly fair value gap before we resume going lower. So I'm expecting some kind of a consolidation, and after that consolidation, we'll be tapping higher. So people are going to be thinking that we're going to be resuming lower, so it's going to be creating some kind of a bear flag here, and then it will run higher to trap these people who are trusting the bear flag, and then running lower to take both of the parties out and to run for the objectives that are the sell side liquidity here, and we have the weight consequent encroachment. So for now, I'm expecting price to retrace to the weekly fair value gap here, and perhaps it can overshoot to this weekly fair value gap, which also there is a bearish order block that reside there. But mainly, after we walk inside these levels, I'm expecting price to drop below this weak consequent encroachment and to treat it as resistance, which will send price, and it will be acting as a springboard that will send price lower to the weak consequent encroachment and to the sell side liquidity. Going to the daily chart, the same levels here are listed from the high time frame, the weekly, all the way down to the daily chart. As you can see, this is the weak consequent encroachment from the weekly chart, and this is the sell side liquidity on the weekly chart. It's also this week consequent encroachment, which is the discount wick of this wick exactly. It's also the week consequent encroachment, so it's more influential here. We have an inversion fair value gap here. After we took this side liquidity, we run up higher. So I'm expecting price if it treats the high of that inversion fair value gap high as support, it can send price higher to the buy side liquidity and to accumulate more order and overshoot to the weekly fair value gap. Otherwise, if we traded and closed, or if we traded and showed no signs of rally up higher, I'll be expecting price to treat the inversion fair value gap low if we trade and close below it as support, as resistance that can set price lower to these relative equal lows and towards the low consequent pushment and the sell side liquidity. But mainly, what I'm favoring here in gun to my head, I'm wanting price to run up higher, reaching to the buy side liquidity here, because many people who are trading, many people who are shorting from here, who caught this move from this high, are going to be, or even this high right there, are going to be trading their stop loss above this high, since we created a low, high, low, low. So price is gonna be price all the retail people who are trading are gonna be trading their stop loss above this high to be part of this move. So we're gonna give them this move here, what they got, but we're gonna be trapping them into their own positions here by tapping into their buy side liquidity or their buy stops, and then trapping them that we're gonna be going long. So they're gonna be trapped in longs, and we're gonna be benefiting from their sell stops. They're gonna be resigning below market price. So below these relative equal lows, we have sell stops. Price is gonna be tapping into them in the future after we work inside this buy side liquidity. Remember, on the weekly chart, price has worked inside the external range liquidity. Now we expect it to work inside the internal range liquidity. So price always goes from internal range liquidity to external range liquidity, and from external range liquidity to internal range liquidity. That's how market works, basically. So I think that's pretty much it for the Dow. Going to Euro USD, also known as Fiber. Here we have reviewing the weekly chart. As you can see, last week, as a result of last week's trading, we created a fair value gap here on the weekly chart. It's a small imbalance here in that small fair value gap. I'm expecting price to work inside fair value gap, this fair value gap, and then if it wants to resume going lower, I'm expecting lower prices on the EU, running for once we trade inside and make this fair value gap efficient, and we balance it out. Once we trade below this weekly consequent approximate without taking this low, I'll be monitoring closely if we treat the weekly consequent approximate of this discount wick as resistance. So, and then I'll be interested in going short on EU, targeting this low and the sell side liquidity here. You can also measure and look for the low of this candle here, this candle low, and the weak consequent approximate of this discount wick as also means of targets. Since we're in an environment of there are many geopolitical things happening in the world, so you have to be more nimble in your trading, especially next week. I'm gonna be tapping into this conversation or this topic later on. Anyway, so this is what I'm expecting. I'm expecting price to work inside this fair value gap and then resume going lower. As you can see, like we've seen so many down close candles the past few months, so it's very expected and normal to see price have some kind of retracements to the upside before resuming going lower. Going to the daily chart, I'm expecting price to reach to this buy side liquidity. This buy side liquidity, as I've mentioned, so many buy stops are betrayal above this high. People who are short from here, from the volume imbalance, who caught this move and they're still in profit here, they're still in green. After we took this low, they have immediately trailed from their stop loss from this high towards this high. So there's a larger magnitude of buy stops or buy side liquidity residing above this high, which is this level here annotated. So many buy stops are residing above this high. So tapping into this buy side liquidity, which also is approximately overlapping with the weekly fair value gap, so price can make this fair value gap efficient, overshoot to take this buy side liquidity, and then resume going lower. So this would be turtle top entry short, for example. I'm not trying to call the top, and I'm not trying to call the bottom in any market. So once we're in a sell program, as you see here in the Euro USD, I'm not trying to pick the bottom here and call that we've created the low here and we're gonna be resuming going lower. That's infancy. So I'm sticking with the sell program. See if then price wants to break these highs, this high with magnitude and speed towards the upside, and then I'm gonna be changing my mind and I'm gonna be monitoring closely how the market is booking and how the market is trading, and then I'll be gonna be deciding is that a change in the market, is that is a quarterly shift, like when we're quarterly shifting from the sell program to the buy program, and then I'm gonna be deciding if that's a significant move to the upside or not. So that's pretty much it for the Euro USD. Going to the Pound USD, also known as the cable, here reviewing the weekly chart. As you can see, last week, as a result of NFP, we've seen a large candle here, or large trading week, excuse me. So I'm expecting price now to work inside this fair value gap and then resume going lower. If we trade below the weekly consequent encouragement, which overlaps the weekly consequent encouragement of this discount wick, which overlaps with the weekly fair value gap, this weekly fair value gap, which we didn't close below it. So it's still a fair value gap. Once we close below it, it means that we close below the weekly constant encroachment and we close below the weekly fair value gap. So these are going to be an influential level. So there's a convergence between two important levels. Once we close below, without taking this low, I'll be expecting price to return to treat them as resistance, and I'll be looking for shorts at that time, aiming for this low for this inside liquidity and the weak consequent encroachment. And if we were really animated and overshooting to the downside towards this side, this inside liquidity. I don't have it annotated on my charts, but it is what I've calling it now. So this inside liquidity with a weak consequent encroachment. Going to the daily chart, as you can see, I want to see price takes this buy side liquidity since so many trail buy stops are going to be trailed above this high, and to walk inside this weekly fair value gap. So this is a weekly fair value gap listed from the weekly time frame, this fair value gap all the way down to the daily time frame. And we have some fair value gap. We have this fair value gap, price can walk inside of it, and we have a bearish order block. So price can walk inside these levels and then trade lower. For your info, that's ICT bearish pattern, hashtag number 2. So if you go to your to his core content, and if you go deep into his content, the core content of 2016, 2017, you see that this is very much the ICT bearish pattern number 2. So I think that's pretty much it for the pound USD, and that's a wrap up for the weekly review. I just want to add some points, and I want to address some points that we are currently at a very sensitive geopolitical things that are happening in the world between Gaza and between Palestine and Israel. So as a result, we can see a huge opening gap on Sunday, which is today. We can see a huge opening gap that can result in fear in the marketplace. So it's advised for you to be extremely cautious and extremely careful about your positions and to not hold or overhold your positions. So try to be nimble in your trading and try to get in and out very quickly. For your info, tomorrow we have a holiday, Columbus Day, I believe. So, and generally, the rest of the week we have CPI, PPI, and these. We have a lot of like next week is filled with red folders and red news, like basically. So it's gonna be a volatile week. So I think that's pretty much it for this weekly review. I just wanted to add my points here. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.